Your paycheck is gone before the weekend because the amount deposited into your account is not the amount you are actually free to spend. A $1,900 paycheck can arrive on Friday and look like a fresh start, but rent, the car, insurance, credit cards, utilities, groceries, gas, and automatic payments may already have their names written on almost every dollar. By Sunday, 1900 can feel more like 190. The money did not mysteriously disappear. It arrived already promised to other people. That is the paycheck illusion. Your bank balance shows all the money together. It does not show the bills standing behind it, waiting for their turn. So Friday feels good. You breathe. You fill the car with gas, buy groceries, and maybe grab dinner because you worked all week. Then the automatic payments start landing. The phone bill, the car, a card minimum, a streaming service you forgot about. By Monday, the account looks completely different. Now you are staring at the screen, thinking, how did I spend all that money in 2 days? Most of the time, you did not. A large part of it was never truly available. The latest Bureau of Labor Statistics figures show that housing and transportation together accounted for just over half of average household spending. Two basic parts of life can claim more than half the budget before food, debt, saving, or fun enters the conversation. Imagine you take home $1,900 every 2 weeks. Maybe $900 must be protected for housing. $260 goes toward the car. Insurance takes $110. Phone and utilities need another $100. Credit card minimums take $150. Groceries and gas need $180. That leaves about $200. Your bank showed $1,900, but your real decision money was closer to $200. If you make choices using the first number, the second number is going to hurt. Your balance tells you what is in the account today. It does not tell you how much is already needed tomorrow. There is also something emotional happening on payday. Research has found that spending often rises after people receive a paycheck. Some of that is reasonable. Bills, groceries, and other necessary purchases are often timed around payday. But some of it is relief. You spent days watching every dollar. Then the account looks healthy again. Your brain relaxes. $40 does not feel dangerous anymore. Neither does 20 or another 30 online. Each purchase looks harmless until it collides with the bills that were already waiting. Then there is the monthly payment trap. Companies rarely want you thinking about the full price. They want you thinking about the smallest payment. The phone is $35 a month. The furniture is 4 easy payments. The car is $600 and something. A vacation goes on a card. A few purchases go through buy now, pay later. Each payment sounds manageable alone. Together, they quietly build a wall around every future paycheck. You keep getting paid, but less of each deposit actually belongs to you. So how do you stop this without turning your life into one miserable spreadsheet? Start by finding your real payday number. The moment you get paid, subtract everything that must be covered before the next paycheck. Include bills, groceries, gas, debt payments, and anything else you know is coming. Whatever remains is the amount you are actually free to choose how to use. Do not wait for the charges to appear. Mark that money as unavailable immediately. Move it into a separate bills account if that helps, or keep a simple list beside your balance. The method does not need to look impressive. It only needs to stop you from spending the same dollar twice. Next, plan by paycheck instead of only planning by month. A monthly budget can say you have enough money overall, while bill timing still leaves you broke during one particular week. The Consumer Financial Protection Bureau explains that cash flow is about both the amount and when it enters and leaves. Look at which bills fall after each payday. If almost every large payment attacks the same check, ask whether the due dates can be moved. Not every company allows it, but spreading the pressure between 2 paychecks can change the month. Then give every deposit 3 jobs. One part covers bills, one part keeps you going until the next payday, and one small part prepares for expenses that do not arrive every month. Repairs, medical costs, annual renewals, gifts, a higher utility bill. These expenses may feel unexpected, but something like them is always coming. The Federal Reserve found that 63% of adults could cover a $400 emergency with cash or its equivalent. It also found that 59% experienced at least one major unexpected expense during the previous year. That is why even $25 or $50 from each paycheck matters. It gives the next surprise somewhere to land besides a credit card. After that, attack one large monthly expense. Review the car, insurance, phone plan, expensive debt, or a subscription you forgot. Fixing one heavy bill can create more room than feeling guilty about coffee all year. And try one payday rule. Do not celebrate the new balance until the bill money has been separated. Give yourself one evening. Let the excitement settle, then spend from the honest number. If you like simple money videos without confusing finance talk, tap like and subscribe to The Lazy Wealth Bro. Your paycheck is gone before the weekend because too much of it was committed before it ever reached you. The answer is not to make payday feel rich for a few hours. It is to make the day before your next paycheck feel calm. So when the next deposit arrives, do not ask, how much money just hit my account? Ask, how much of this money is actually mine to choose? That is the number that matters.